Saturday, May 3rd, 11:10 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. There's a big event coming up this Wednesday in the United States. Are you aware of what that is? I'll share it with you. The Federal Reserve has a meeting to vote on interest rates. Two things: they either leave rates unchanged or they change them. And then they release their press statement going forward, what they're thinking into the next meeting, as well as the performance of the past. I shared my opinion, what I believe is going to occur, and I'm already have money in the table with those positions. But this video is less about that and more about the year-to-date performance. A lot of people want to do a performance review on the executive branch for the first 100 days, but most public media or money managers or people that manage the lower half don't own up and show the performance year to date of the major U.S. stock indexes and the stock sectors. I'm going to show you that here. And the other part is not just the stock market. There are other financial assets you can invest in that perform better than the stock market sometimes. There are currencies, there are commodities, there are fixed income. I shared several of those on a regular basis. But again, here, we're just going to look at the stock indexes and the stock sectors. We're looking at a monthly chart because we recently just started the new month of May. We want to identify, are we trading above or below the high of the year? Are we trading above or below last month to help identify leadership? Identify where the smart money is going. So on the top left is the S&P 500, below the high of the year. Already broke above the high of last month. The middle is the NASDAQ 100. Same thing, again, below the high of the year, broke above the high of last month. The Dow Jones Industrial Average, one of the oldest stock indexes, below the high of the year and still inside the range of last month. Bottom left, the Dow Jones Transports, below the high of the year, still inside the range of last month. And the middle, bottom, the Dow Utilities Index, all-time new high for the year, broke above the high of last month, all-time new high for the year. And the bottom far right, the Russell 2000, below the high of the year and still inside the range of last month. So right off the bat, if you can't see it, I'll say it again. The Dow Utilities Index is the strongest index here year to date, outperforming all the other ones. In that index, there's a list of companies. I've shown that in the past. And you can see which one's doing the better, because not necessarily are all the companies in that index performing the same. The S&P 500 stock index in the top left. It's an index comprised of several other indexes. What's inside the S&P 500? The NASDAQ 100 index, the Dow Jones Industrial Average, the Dow Transports, the Dow Utilities, plus the S&P 100 are inside the SPX, not the Russell 2000. Nope. But inside the S&P 500 stock index, it's also broken down to 11 sectors. Let's go look at the 11 sectors, see if they're performing better than the S&P 500, and if any of them are performing better than the Dow Utilities. So understand that Dow Utilities, the companies in there pay high dividends. Not all companies pay dividends, and some don't pay high dividends. Dow Utilities pay higher dividends than many other companies. So people are going there when they're not expecting growth in the stock market. They want to go for some kind of fixed income. Some of them settle for dividends. The 11 sectors, I'll have them in the current order or about the current order of the weighted average, which ones represent the largest percentage of the S&P 500. Same thing. Each candle's a month, year to date. XLK, symbols top left. You want to know what those are? You could do them on your own time and watch my other videos. Keeping this short and fast. XLK, not at all-time high for the year. Actually, this is all-time high for the year. But it did break above the high of last month. So again, Dow Utilities are performing better than XLK. These are stock ETFs. You can buy them. Indexes, AKF ETFs. XLV, below the high of the year, still inside the range of last month. XLF, below the high of the year, still inside the range of last month. XLY, same thing, still inside the range of last month, below the high of the year. XLC, below the high of the year, broke above last month. That's XLC. XLI, below the high of the year, broke above the high last month. So right now, I see none of them are outperforming the Dow Utilities. XLP, below the high of the year and still inside the range of last month. XLE, here's the high of the year and still inside the range of last month. And I need to move this down because last month I made a new low for the year. There we go. XLU, below the high of the year, still inside the range of last month. XLRE, yep, below the high of this year, still inside the range of last month. And XLB, below the high of the year, still inside the range of this month. And again, last month made the new low for the year. There we go. So these 11 sectors, none of them made all-time new high for the year. They're underperforming that one stock index, the Dow Utilities. So adult responsibility. If you're outsourcing it to some kind of institution to manage your money, a mutual fund, a hedge fund, pension fund, I'd consider go look at them, see how their performance is. If they're underperforming the market, why would you stay with them? You could do better on your own. I just showed you what you could go out on your own and purchase. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.